Welcome back, my dear learners. Before the ad break, I was speaking of the types of informal businesses. So quickly now, I'm going to go on to indigenous accounting. Indigenous accounting. Now, you will find that most of the informal traders deal in cash because they're selling some of them in the streets, and they do not then keep formal records or transactions. So how then are they able to calculate if they're making profit? And then you would find that these informal traders usually have limited capital to start their business with. So they put in very little money into the business on the first day, and then they use that particular cash collected for the day to buy stock that they will need to sell on the next day. Now, you would find that when people are doing their indigenous bookkeeping, their aim is not to make such huge profits, but for them to be able to survive each day and then have enough stock so that they can sell in the following day. They also keep low inventory amounts, that is, whatever they're selling, they keep low stock amounts, mainly because they don't have a fixed place to keep the stock, but also because of their limited capital. So they keep low stock amounts, and then they would not then have too much stock, mainly because of the type of goods that they can be selling. For example, if you're selling fruits, you wouldn't want to keep so much. All right. Now, you will also find, as I continue on with my indigenous accounting, that these informal traders would normally have very few assets, all right, because they don't have the capital to have much assets. The selling price can change often because it depends on the purchase price of the goods and the owner's decision. If he buys the goods a bit cheaper, he can then drop his price as well. And then there are no source documents that are kept because there is not formal recording in the business. Dear learners, I'm going to quickly move now on to the characteristics that if you look at a business, how can you then characterize if it is a formal business? Let's start. If you look at a business, these are the signs or the characteristics that will tell you that this is a formal business. It has to be registered with a particular authority. Remember, we mentioned SARS. It has to have an operating license. That means it must be permitted to operate. It must be registered as a VAT vendor. It must have a proper set of books that you can be able to see money received, money paid, things like that. It must also have a fixed place of business, an address. You must have that if we're talking of formal businesses. How then will an informal business look like? It will not be registered with any authority. It also will not have an operating license. Remember, it's not registered. And it will not be registered as a VAT vendor as well. And it will not keep a set of books. And then it will also not have a fixed place of business. Now that we have characterized our two different types of businesses, I want us to quickly go back now to those calculations. I know you are saying, Mr. Simbi, I want to do some calculations. So bring your calculator close. We're going to do some interesting calculations just about now. I've come back again now with my calculations. Remember what I said earlier on. The cost price, here is my cost price. If you remember what I said, the cost price will always be 100%. Whenever we're calculating, remember that your cost price will be 100%. But your markup will change. It can be 10, it can be 20. In the previous calculation that we did, do you still remember how much it was? Thank you. It was 25%. It can be 30, it can be 40. Yes, it can as well be 50. It depends. Therefore, your selling price would then depend on the markup that you would have been given. All right. So I want us now to do some quick calculations. Let's go and see. In this particular activity, we will use the UK method. Do you remember? What you want over what you have, multiplied by what you have, will give you What you want. Thank you. Some of you already have got it. Remember, what you want must be a what? Percentage over what you have must be a percentage. And then what you have must be a rand. It will give you what you want as a rand. Remember not to mix them up. Okay. Now, let's see the information. The trader buys goods for 120 rands. Here is the key. Buys goods. Okay? And adds a 50% markup. What is the selling price? So what we want is the selling price. Okay? So let's go back again. Cost, 100. Markup, 50. So it will be 100 plus my 50 gives me 150%. What is it that I want? They said, what is the selling price? Selling price is what percentage? 150. So what I want is 150. What do I have? I have my cost, which is 100, and my cost, which is 120. This is 120 rands. Remember, this is your rands. It will give you now your selling price in rands, which is 180. The moment you get that, yes, you are sorted. This is how you get your selling price using the UK method. Okay, I want us to quickly now change it around. What if I'm given the selling price? What if you are given the selling price and then they now want you to calculate the cost price? Are you able to do that? Using the UK method, everything is possible. Let's see if we can do that. The trader buys goods for 180. After he has added a 50% markup, what is the cost price? Okay, so the trader is selling his goods for 180. This is after he has added a 50% markup. What was the cost price? Okay, now this will be very, very simple. Very, very simple. Remember what I told you. Cost is always 100. Markup, according to this one, 50%. Therefore, 100 plus 50 gives you 150. Very correct. What is it that you want? That is what you must always ask your question. What do I want? What was the question? What is the cost price? What did I tell you? Cost is always what? 100%. So what I want is 100. What is it that I have? I have my 150 and which is equal to 180 rands. So I'm going to say 100 over 150 multiply by my 180 rands. It will give me now my 120. What does that mean? My cost price was 120. So with the UK method, you can use it when you have cost to calculate selling price, when you have the selling price to calculate coming back to the cost. You getting it? Okay, I'm going to show you now one last trick before we conclude today's class. Here's the last trick. It says, the trader sells goods for 180. After he has added a 50% markup, what is the profit that the trader is making? Now, they don't want the selling price. They don't want the cost price. They want the profit. Do you still remember what I told you? Okay, let me see if you still remember. Cost is always 100. And then mark up in this particular question, how much was it? 50. Thank you so much. Okay, so remember it's percentages. That means if I add these two, my selling price is going to be 150%. But this is equal now because it says sells goods, selling price, that is equal to the 180. Okay? What is it that I want? What I want is the profit. Remember, the markup is the profit. The markup is the profit. What I want is the 50. What I have, remember you have must have two values. You have must have two values, so one value, two value. So this is my have then. What I have is 150 multiplied by 180 rands. You punch that in your calculator. Please quickly do that. Quickly do that. Punch that in your calculator. How much do you get? Thank you. Someone is saying, I'm getting 60, 60, 60. Thank you so much. If you're getting 60, therefore, it means you got the profit. My profit becomes 60 rands. Dear learners, it is very important that you continue practicing these calculations. Thank you so much for joining me in today's class. Hope to see you again in the next class. Until then, goodbye and take care.